such a beautiful lie. When I still want you closer. I am longing for closure, and I'm wondering why. No,
All
no
right,
matter
so good
what I
morning.
do,
Good morning.
I keep on falling for you.
We are just doing a live stream today, jumping into some important macroeconomic events. We've had some recent developments in some fiscal policy. So, fiscal spending across the board is increasing. Obviously, the big, beautiful bill is taking full effect. President Trump is set to sign it into law today. So that's roughly adding about 3 trillion more to the deficit. Some speculate about 5 trillion, but safe number to say is 3 trillion in fiscal spending is being added. Now, there's a lot of different parts of this bill that we're going to touch base on, from defense contractors, consumer discretionary, hospitality. There will be some technical setups across the board, capital rotation trends that we'll try to identify. We'll run through the sector analysis, all of the S&P 500 sectors. And then, of course, if you have questions along the way, feel free to put them in the chat. It's probably just you in the chat right now, Sarfraz, so we got some one-on-one time. But let's start to jump into this bill here. So first things first, we got major tax cuts and deductions, permanent extensions of 2017 Trump tax cuts, and doubling of the standard deduction, additional 1 to 2,000 per filer. No federal income tax on tips and overtime through the end of 2028. New deductions up to 10,000 in auto loan interest for U.S. assembled vehicles. That's pretty important. Obviously, that's aligning with his tariff obligations and trying to make America great again. Child tax credits increased by $500 to $2,500 through 2028. SOLT deduction cap raised to $40,000 for incomes up to $500K, phasing back to $10K in 5 years. Trump accounts, so this is also him trying to cement his legacy. So Trump accounts, $1,000 seed deposit per child born in 2024 to 2028. Parents may contribute up to $5,000 annually tax deferred. That's pretty important to recognize. Again, that's him solidifying his legacy, wanting people to remember him, installing Trump accounts, $1,000 seed deposit. That's pretty inflationary if you ask me, but very stimulative, and it's helping give back. It's forward looking, helping the future generations. We'll have to dive into that another day in terms of what the details are. If a child can only access it at a certain age, maybe when they're legal, it's kind of almost like an investment in the future generation, which is nice to see. So in terms of the major tax cuts and deductions, oh, I forgot to transition the slide here, but in terms of the major tax cuts and deductions, the no tax on tips and overtime is massive. That is going to be I think, a very, very important driver for the U.S. economic growth. It's going to help people become more productive, want to be more productive, because, when you're making overtime 1.5 times your average earnings or wage, that's a big jump. And it does allow those go-getters, those people that are willing to put the extra time and effort in, to now make more. So that's very, very good, in my opinion, for the overall economy. I think that is a huge factor, the no federal income tax on tips and overtimes through the end of 2028. The 10K auto loan interest for U.S. assembled vehicles, that's a pretty big deduction. Obviously, U.S. automakers are going to set to benefit from that. Trump is sticking to his word, MAGA, making America great again. We will see if certain U.S. automotive stocks can continue their gains. We've seen some incredible strengths in like Ford. Ford has really started to break out recently, so that's one that's certainly benefiting. I think you've clearly seen on the technical charts. All right, Trump accounts again, we went through that. Let's move along to border and immigration and defense spending. So this is an interesting category. We have traded defense stocks quite well, specifically RTX. Now, border immigration and defense spending 175 billion for border enforcement, including 46 to 70 billions for the wall and barriers. Funds for new agents, detention beds, and $1,000 asylum fee. So again, that's a very big business. Law enforcement in the States, whether you agree with it or don't agree with it, it's a whole additional amount of capital, a very large amount of capital on the fiscal side now coming into the economy, and it's certainly going to help propel some individual stocks. Mass deportation funding up to 1 million removals per year, 100,000 detention beds. It's pretty big. 150 to 160 billion in defense outlays, including 25 billion for the Golden Dome missile defense system, plus military restocking and naval assets. So again, we will look through some of the military stocks to see if we can potentially see some trends, some technical setups. I think there are some technical setups that are occurring, but we got to be careful with this bill. We don't want it to be a buy the rumor, sell the news type of event, because they say stocks are always forward looking. So a lot of the times Wall Street already knows this, that they've already positioned themselves ahead of the crowd. So we have to be very cautious of that Wall Street adage, buy the rumor, sell the news. I mean, the futures market right now is taking a little bit of a dip, so potentially we could already be seeing some minor signs of that. All right, Medicaid, SNAP, and work requirements. Huge cuts to Medicaid, up to 900 billion. Obviously, we've seen the healthcare sector under immense pressure. UNH is one right off the top that has been just annihilated on a year-over-year basis. 900 billion adds 80-hour-a-month community engagement or work requirement for able-bodied adults by 2029. SNAP changes, expands work requirements to age 64 and shifts administration costs to 5% and oversight to 75%. CBO projections, 10 to 12 million Americans could lose health coverage by 2034, billions saved by offset tax cuts. Okay, so what does this mean if 10 to 12 million Americans could lose health coverage? That also means that a large share of those Americans could probably push back into the insurance game. So we'll look at some insurance stocks as well. Names like PGR, first things come to mind, but there's a whole bunch of insurance stocks that could potentially benefit as people look to buy private insurance again, up their premiums. All right, education, student loans, and pension. Overhauled student loan repayment. Eliminates income-driven plans for 2 repayment options, tightens borrower protections, taxes certain university endowments up to 21%. We've seen under the Biden administration, there's been a whole bunch of loans that were forgiven or paused. That's coming to an end. There's a whole host of people that are having to now repay their debt, and I'm fully on board with that. I mean, if you take out a loan and you're getting a huge educational benefit from it, you need to repay that debt. Now, it's one thing if you're going through bankruptcy or some sort of a thing like that, but if you're young, you're in the workforce, your ability to make money, you need to repay that debt, in my opinion. All right, pension reforms, cuts in federal employee retirement benefits, smoothing early retirement savings. All right, rural hospitals and infrastructure. 25 billion for rural hospitals plus investments in air traffic control modernization. All right, well, that's interesting. Fiscal impact and political fallout. Deficit impact adds an estimated 3 to 4 trillion in debt over 10 years per CBO and analysts. Political divisions passed narrowly in the House 218 to 214 and Senate tiebreaker. Vice President Vance, moderate Republicans rebelled, high-profile criticisms from Democrats and some GOP members, blah, 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 blah. Symbolic provisions, 85 million for relocating NASA shuttle to Houston, 40 million for the Garden of American Heroes. Summary. The giant package cements core Trump 2025 agenda promises. Tax relief for individuals and businesses, and that's the big thing. Tax reliefs, guys. Tax reliefs, although they take money out of the government's pocket, initially, they end up putting more inside the government's pocket because people are starting to spend more. And it stimulates the economy. It adds robustness, which is why we're in such a raging bull market right now. This forward-looking bill has definitely priced in a lot of economic growth in the stock market. We've seen employment data coming very, very strong. So right now, there's clearly a huge push in consumer confidence because of these tax benefits. The no tax on tips and overtime, I can't stress how big this is. Tax relief for individuals and businesses, border security strengthening, defense expansion, and rollback of social programs and clean energy policy. While Republicans hail it as a patriotic declaration of independence from decline, critics counter it shifts costs to the poor, accelerates climate rollback, and deepens the national debt. It certainly deepens the national debt, no question. But every administration has. That's why we've seen a feud between Elon Musk and Trump. All right, so now we ask ourselves, now that we've kind of have a brief synopsis of the highlights of the bill, obviously there's a lot buried in there that over the coming sessions and days and weeks we'll be able to dissect. But let's look at some of the top stocks that will likely benefit. So defense contractors, the bill includes 150 billion boost to military spending. Lockheed Martin with 176 billion backlog and global demand for F-35s and hypersonic weapons. Lockheed is well positioned to capitalize on increased Pentagon budgets. So that's certainly interesting. We'll have to keep Lockheed Martin on watch. Caterpillar, set to benefit from the 46.5 billion in border wall and infrastructure spending. Its heavy machinery is essential for construction projects. So again, I think looking at some of the construction names should be on top watch. We'll dive into some of the defense contractors as well. Consumer discretionary and retail. Tax breaks on tips and overtime will increase disposable income for millions of Americans. Yes, it will. Amazon gains from increased consumer spending, especially among service workers. AWS and Prime provide strong growth levers. Amazon's a weird one. We'll jump into that. A 500 basis points corporate tax cut could boost earnings per share by 6%, freeing up 93 billion estimate for buybacks and store upgrades. BJ's wholesale is expected to see a 7% EPS bump from tax cuts. Very, very cool. Hospitality and services. Lower corporate tax cuts and increased consumer spending benefit from the sector. Hilton Worldwide, ticker HLT, could see an $8 per share. Sorry, I didn't even translate that. Could see an $8 per share in earnings per share tax savings. Wingstop, domestic focused fast casual chain project to gain 67% in EPS from tax cuts. Energy and industrial. Trump's pro-fossil fuel stance and deregulation favor traditional energy and industrial firms. Kodiak Gas Services, ticker KGS, poised for a rebound with increased domestic energy production. Archrock Inc., ticker AROC, natural gas compression services will benefit from the expanded drilling. And LNG experts, Centrus Energy, ticker LEUA, the only U.S.-owned uranium enrichment firm positioned to dominate the post-2028 domestic nuclear fuel supply. Consumer staples. All right, Post Holdings. 80 to 90% of the revenue is U.S. tax-based. Tax cuts could boost free cash flow by 4% for Post Holdings. Ticker VVV Valvoline. A 500 basis point tax cut could boost earnings per share by 6%. Bellring Brands, BRBR, could see a 6 to 7% earnings per share increase, enabling more reinvestment. So obviously, a lot of stocks in the U.S. could benefit from tax cuts. Earnings per share could increase in the very near term. So investors' takeaway, Trump's big, beautiful bill is a mixed bag. Massive tax cuts and spending increases paired with deep cuts to social spending. Investors, the key takeaway is sectors tied to defense, infrastructure, consumer spending, and domestic manufacturing are likely to see the biggest takeaways. All right, cool. So let's now discuss some individual chart setups. So first things first, we'll just take a look at the NASDAQ QQQ chart. Very simplicity. Taking this pivot high back in 2021 to your pivot high here in 2024, we're now tagging this area. So to me, QQQ, NASDAQ stocks, semiconductors are much more extended than certain S&P 500 stocks, which is why I'm a firm believer that we will see some capital rotation trends and we'll try to identify some of those trends. We've already been positioned on the front line of some of those trends, but definitely QQQ is into a bit of resistance here. When you look at the SX chart, it is still could run a little bit higher. I still have a near-term upside target of about 6,700 on SPX based off of this inverse head and shoulders that we've triggered, but I would love to see a back test to the neckline. Even a back test to the 6147 would be healthy. Consolidating above this previous all-time high would be very, very good for the overall market trend. But you can clearly see the SPX really isn't bubbling up against this upsloping trend line, as opposed to the QQQ. The Qs are already bubbling up to this upsloping trend line. So again, maybe we still see a little bit of profit taking in NASDAQ stocks that could flow into S&P 500 companies. What I find really interesting right now is the futures market is actually looking to be a buy the rumor, sell the news type of event here. Look at the Russell. So Russell down 1.19% here in the futures. S&P 500 down by about 0.58%. So clearly hitting some resistance here in the near term. The NQ also seeing some sell side pressure down 0.73%. So this is the concept of, is this turning out to be a buy the rumor, sell the news type of event? Perhaps it is. You know, a lot of times stocks will forecast. Investors in Wall Street typically know the news ahead of time. Certainly we didn't. We had some rumors that the bill was going to be signed before July 4th, but we didn't truly know. So obviously I think the hindsight 2020 looking back, this rally that we've recently seen, I think is a huge rally in anticipation of this bill being signed and now being put into law. So obviously with additional fiscal spending, it's hard to think stocks won't go up when you're injecting another $3 to $4 trillion across various sectors. Interesting to see again, crypto under pressure as well. So Bitcoin back testing its little breakout trend line here, coming under pressure. We'll have to watch that for a potential failed breakout. I still think it's acting okay, but right now the futures market is showing a little bit of a buy the rumor, sell the news type of event. All right, so now we're going to go through some of the sectors. Just going to pull them up on my other screen here too. All right, so starting with XLB materials. Materials are very, very strong on the session here. You can clearly see that there's an inverse head and shoulders breakout pattern observed through this area here. So a very strong breakout pattern in XLB. Now the question is, are we going to get a pullback? I think there certainly is a decent chance of a pullback. Let's just look at where some of the biggest volume was traded. So again, we can clearly see the biggest volume point of control was really traded in this zone here, this 88 zone. So that would be your institutional buying level. That would be a retrace back to this previous little breakdown zone. Or sorry, breakout zone. So that would be an area to keep on watch. I wouldn't chase it here, as you are coming up into your value area high here. But definitely materials are on watch for a pullback. You get a pullback into 89, 88. 88 would be an ideal entry. But obviously materials are one of those sectors that should benefit with increased infrastructure spending. This particular sector should do very, very well. And I'm looking here on my other chart. So what I think is interesting, let me pull up my other chart here. So you can see XLB right now on this daily chart is potentially going to form a golden cross where the 50 intersects with the daily 200 moving average. Typically in the short term, that is a sell signal. So just keep that moving average convergence on watch because that is a sell signal in the near term. Okay. Weekly chart, strong still. You're above the 50, you're above the 200. But as those two moving averages converge and get a little bit tighter, that's typically is a bit of a sell side signal. All right, let's move along to the next sector here. So communications, XLC. Obviously, XLC has been seeing some real phenomenal force to the upside. That's part and parcel due to Meta being so strong. So XLC has certainly benefited with this Meta rally. I do still have upside target for Meta, higher price in Meta. But we just got to be mindful that the NASDAQ is into a decent amount of resistance. But I could see XLC still pushing up. There's this clear little trend line around 111, 112. I could see XLC still pushing higher here. XLC is another one that's clearly broken out of some really interesting formations here. You have this massive left shoulder, massive head, and then one could easily argue here's your secondary shoulder. So you got this really sloppy, but it's there. An inverse head and shoulders pattern is clearly there, and this pattern has a flat top neckline on communication. So what's really interesting about that is if you draw that upside measured move target, and again, things happen in stages. It doesn't just do one shot straight move. But over the next, say, 12 to 24 months, we got an upside target of about 127 on XLC. So that's a really substantial move to the upside. I mean, we're talking about a potential rally here. Let me just measure it out. Where the heck's my tool gone? So we're still looking like a potential 17% rally. Now, the question is Google going to start participating in this rally, right? So there's clearly a strong trend in communication stocks. There really is. The only concern, if we fill up our other chart here, and we look at the weekly chart of XLC, you can see that it is trying to bubble up and break out of this little bit of a long-term resistance. So right now there is potentially some resistance here. We are trying to sweep it on the weekly chart. But that would be the only cautious is this needs a little bit of consolidation, but it does look like over the next 12 months, communication stocks are going much higher. And that kind of aligns with the Meta trends. I mean, Meta is growing their top and bottom line aggressively. Very healthy trend on Meta's revenue, gross profit, gross margins. So from a fundamental standpoint, the earnings are still aligning with higher price, which is what the technicals are saying. Obviously, there's backing and filling that should happen along the way, but look for communication stocks entries on the long side. I do think Meta is going to be a strong one. Google should also be a strong one if it incorporates its AI search engine right into the Google search engine bar. That is something that could absolutely benefit Google as well. Obviously, ChatGPT has kind of been crushing the AI search engine business model. It had over 5 billion searches as opposed to Google's. I think Gemini had about 500 million. But if Google really directs a small percentage of its search engine inquiries from its main Google platform, you're talking about a 5%, search engine increase in their AI would easily blow past ChatGPT. So we'll see if they are successful with that, but definitely communication stocks are looking strong. From a meta technical standpoint, there's continued buying with their meta AI glasses. I would be curious to find out what the margins, what they actually make on those, but from what I'm hearing, the chatter, just recently visiting my optometrist, who runs one of the biggest optometry trains here in Canada, uh, they're all sold out on their second version, so there's still some increased buying. All right, let's look at the next sector now, which is going to be energy. We've certainly traded energy quite well. So XLE is interesting because there's been a lot of tension around. Let's just start fresh on this whole chart. There's been a lot of tension around, obviously, Iran, Israel, but tensions have subsided and then they spike higher. So we just need to be mindful that there's one headline away from pumping oil. Right now, if we look at crude oil, oil is still technically in a bit of a downtrend. And why do I say that? Well, if we look at the weekly chart, you never really held this weekly high pivot. It was reversed. So oil is still technically on a larger time frame in a downtrend. However, if this turns out to be a right shoulder formation developing on crude oil, then energy stocks will absolutely fly. Right now, crude on the daily has broken out and is trying to hold steady, but if it breaks this bear flag, we're heading much, much lower. So we're at a critical inflection point. I want to see crude oil establish itself above $66 a barrel before I'm a little bit more confident in some of these XLE names. We've already taken a monster amount of profits in XLE, but nevertheless, XLE should just track oil. It is showing some outperformance compared to the actual oil space, so maybe there's an underlying bid there that crude oil should catch a bit of a bid. The positives for XLE right now, if we transition you to our other chart, XL in the weekly is sandwiched between the weekly 200 and the weekly 50. So it's actually coiling here for a really, really decent sized move to the upside. All right, let's move along to financials. So XLF is really interesting because this has been a standout breakout sector. Beautiful bull flag consolidation breakout. I think financials have caught a really sizable bid because interest rates have been soft in recent sessions, but financials are coming into a decent amount of resistance here. I think financials are going to go through a bit of backing and filling, a little corrective phase. I'm actually leaning in the short term bearish on financials. That is just my perspective. But one of the reasons why financials is coming into this beautiful little trend line of resistance, interest rates are rising. I think we could see some profit taking. You look at JPM. JPM is into a huge resistance zone here. Massive extension move to the upside. You look at Goldman Sachs. Goldman Sachs has had a huge parabolic rise to the upside. This name needs a little bit of consolidation in order for the trend to remain somewhat firm and healthy, but XLF, I'm leaning a little bit more bearish in the near term just because it has had a pretty substantial move in some of these individual names. I mean, JP Morgan and Goldman Sachs and Citigroup's charts are just absolutely mind-blowingly crazy extended. Just give me 1 second, guys. All right, looking at XLI, so industrials right now. Industrials are also a very strong sector. They've clearly benefited and had a front run over this bill. Huge infrastructure spending is obviously one of the sectors that is benefiting these industrials. So industrials, I think, also need a little bit of a pullback, but weekly chart could suggest a little bit higher off of a 3-bar surge on the weekly. And what I'm observing here is take a look at this weekly breakout. I mean, you might want to do a 3-bar surge on the weekly before you put in a little bit more profit taking. So the only thing that I'm really seeing here in terms of industrial resistance, you can see industrials are hitting that upsloping trend line right now. In the near term, industrials can see a bit of profit taking. They've certainly been a huge trending sector. Really, you've grinded from this breakout zone with minimal consolidation to the upside. So industrials, I think, is on watch for a pullback. Pullbacks can likely be bought in industrials. It's a very strong sector. If you take a look at this other chart that I'll transition you into, you can clearly see you got that golden cross of the 50 and the 200. You ended up pulling back into that golden cross and then catapulting higher. Pullbacks in this sector are likely going to be bought. Very strong uptrend on the daily, even stronger trend on the weekly chart. This is a sector that should still see some continued inflows of capital investment, okay? But just be mindful, the only resistance that I'm seeing right now on the daily chart trend here is basically this up-sloping trend line. All right, we're coming up into that zone right now. So a little bit of resistance, but pullbacks in this sector should be bought. All right, let's look at technology. So XLK has been one of the most important sectors for the market for really forever. Technology-based stocks have just been absolutely ripping and roaring to the upside. This extension move, I mean, let's just measure this out here. Obviously, this is what's propelled the markets higher. But a 49% rally since this huge tariff fall. When the world was ending, global trade alliances were breaking down. But XLK has blasted through key resistance levels, and it's just been a one-way freight train to the upside. What's interesting is I am observing a daily cross on the 50 and the 200. So that golden cross occurred a few days ago. I would still expect a sell side pressure day, at least maybe a week or two of selling pressure. Doesn't mean that if we backtest some key support levels like 250, 243, this is still a roaring uptrend, but it needs to back and fill a little bit. It needs to digest some of these gains. Again, we look at some of these weekly resistance levels, and you can see XLK, if you draw the trend line through those pivots or tagging that resistance, if you use that upper wick, maybe a little bit more before you run out of steam on XLK. So perhaps XLK wants to have the final push for nvidia to hit 4 trillion market cap, and then maybe we see a little bit more profit taking. But again, I showed you that QQQ chart earlier, and it is into a great wall of resistance. But another sector that should be bought on pullbacks, if we simply erase all of this, let's see where some of our volume trends are. You know, recently, if we just take this little constructive move here from, say, this high pivot to there, you can see the most amount of volume was traded really in this zone over here. So pullback to 231 could potentially sweep a lot of liquidity. That's where institutions are sitting, right in that breakout zone. Let's do it a little bit farther from this high pivot to this low pivot. Yeah, same area, guys. Right in that 231 zone is where you have a huge amount of volume. Point of control, all right? Let's look at staples now. So XLP. So XLP is just sitting right on its weekly 50 MA. Also looking pretty constructive for a breakout here. XLP is certainly looking interesting. You can see you're currently above that point of control, volume trends where institutions are sitting. This looks like it's going to break out, guys. So consumer staples has actually lagged. I think this is one that could see some more capital rotation trends. I really like staple stocks here, guys. I do. Staple stocks are holding up quite nicely here. And I think you could easily see a move up to 90 bucks on staple stocks. A very, very healthy trend is trying to be established here in staple stocks. You have this nice little inverse head and shoulders building. If we can get a break through this previous little 82.50 zone, you should see a squeeze higher in staples stocks. So keep staples on watch because it is looking like a sector that probably is going to see some capital rotate into it. But a very, very healthy chart, definitely. And if I transition you here into my other chart, you can clearly see on the weekly chart, staple stocks are hugging that weekly 50 MA. So staple stocks are looking very, very juicy in my perspective. I think we've seen a huge, huge bid bouncing off some of the lows, but a nice inverse head and shoulders. This is one that's gone through an epic amount of consolidation, and it does look poised to keep trending higher. As long as you remain above this huge volume zone here, you can see where institutions are sitting right at this 81.18 level. That is where the most amount of volume is sitting, between 81 and 80.80. So these two massive, going all the way back to 2024 in September, this is your level that you want to stay above, 81.18. That is a huge area. If you get a retest there, you may not even get a retest there, but if you do that, that's your buy zone. This one should go up to about 90 bucks and then some. So very bullish on staples. I think they will catch that obvious rotation. All right, looking at real estate. Real estate's interesting because it certainly hasn't had the backdrop of falling interest rates. That being said, this is one that's kind of on a knife edge, right? If inflation expectations and a strong labor market remain firm, real estate could still see some headwinds because of rates staying too firm and less buying activity. Now, a couple positive things on the technical front. You can clearly see you're trying to break out the trend line. If we look at real estate on the weekly chart, I'm just pulling it up on my other screen here. We're sitting right between the 50 and the weekly. Let's just pull that up here. You can clearly see real estate is sitting right between the weekly 200 and the weekly 50. So big level here. There's a lot of momentum coiling, but I do think that if staples can build this base here and hold this key neckline zone, then it will push higher. You got a massive, again, another massive inverse head and shoulders pattern that has really been establishing itself here for quite a long time. And it does look like it wants to potentially break out here. So I would not be surprised if staples hold this level and start to press higher in the near term. Just look at where our volume trends lie. Yeah, right on this breakout zone. So you can clearly see this is a massive area. If you hold this area, you're going to push at least to 45 bucks. But if you lose this volume area, this volume zone, then it's likely going to fall pretty sharply. All right, let's look at utilities here. Let's first look at where our volume trends lie. So you can clearly see the volume. We're trading well above that point of control, that volume, main volume accumulation zone, institutional zone. Utilities right now are in a very strong bullish uptrend, also seeing a bit of a bid from some of that infrastructure spending. Daily chart is not looking too bad. It does look like utilities are going to stage a bit of a breakout here. What I do like about the daily chart of utilities is if I transition to my other chart here, utilities right now are actually hugging that 50-day. And this 50-day and 200 have converged in a narrow divergence here, or a narrow convergence. And it is poised for a strong move to the upside. Upsloping daily 200, upsloping 50. Weekly chart is still showing some massive strength. Really, since you had that weekly cross many weeks ago, you've gone through this choppy consolidation phase. This is ready for a breakout, guys. Utility stocks are looking interesting. Very strong on utility. Let's look at healthcare now. So healthcare has been one that's definitely lagged the market as a whole. We've seen healthcare come under pressure with certain changes to Medicaid, cuts to Medicaid. Healthcare is obviously in a downtrend compared to the market, but it is trying to show some signs of life. I think that the downtrend is slowly coming to an end here for healthcare. Let's see some of these trends. So clearly under the area of where institutions are sitting, most institutional buying is sitting right around this 145 zone on XLV, which is telling us that one, clear downtrend on healthcare, but two, it does have potentially a massive amount of undervaluation in the sector. Now, this next big zone is important. Right where we're tapping is this next value area. You can see a large amount of volume is sitting here, really from going all the way back to September to current price action, a huge amount of volume. This is your area, your value area low. If we can get through this area, then we're going to push to 145 on healthcare. So the 145 is your main area that you need to recapture to establish a bullish trend. That's where institutions are sitting. Big players, big orders are sitting at 145. Your second biggest zone is really right where we're trading right now. All right, let's look at the weekly chart of healthcare. So if I pull you up to my other screen here, so weekly chart, we're trading just under the weekly 200, weekly 50 sloping down. I think that they're going to likely push this market up to retest that weekly 50, and then we'll have to see whether or not we get rejection or if they want to hold that price action. So I do think that the healthcare is going to make a little bit of a charge higher. We'll see if we can get through this wide range red bar, but that is the big area, 144, 145. And again, if we show you back on that previous chart, that volume where institutions are absolutely sitting, take a look at that, right? Right at that point of control around 145. That's where your big boys are absolutely sitting. You can see we're approaching this next value area low here. Massive amount of volume traded in this zone right now. This is a big area that if we can get through, we're going to have a sharp move up to 145. So from 135 to 145 could happen very, very quickly in healthcare stocks. All right, let's move along to the final sector here, XLY. So XLY right now is also trying to break out. Very, very healthy looking sector. And this has really been underperforming with the likes of Tesla, but a nice constructive bull flag. This is a sector that should continue to see some more upside. A nice clear breakout out of this downsloping trend line. You've got a massive weekly and daily chart inverse head and shoulders. This is a very, very sizable bullish pattern, guys. This pattern looks absolutely juicy for more upside. So I remain bullish on XLY. I think Tesla's going to try to take some leadership here. You're already seeing some consumer discretionary stocks like Nike do very, very well, breaking out of some basing formations. But if we put you onto this weekly chart here, you can clearly see XLY had several weeks of consolidation, weekly chart bull flag, trading above the 50, above the 200, very strong uptrend for XLY. This sector should be one that tries to take a little bit of leadership here in the coming weeks and months. I do think that XLY is positioned for some really substantial amount of upside. Let's look at where our volume trends lie. Right there. So look at that epic breakout, right? Right along this area of consolidation, huge, huge control where institutions are sitting. Boom, a breakout has observed. So as long as price action remains above this 215 level, that is a massive, and I mean a massive level to go long off of, or at least chase price action off of. So keep that on watch. All right, let's look at some individual charts now. We'll run through a couple interesting. So I like XOY. So we'll run through some of those stocks here. Amazon looking like it's trying to break out here. Amazon's clearly trading above its volume shelf, way above the point of control. Looking pretty strong. Some larger term time frames as well. Above the weekly chart moving average 50. You're about to get a golden cross on the daily. Take a look at Amazon's golden cross here. Looks very interesting. Look at this golden cross that is occurring on Amazon. Boom. That's a very bullish signal in the near term. Sorry, over the next 2 to 4 months. You might see some sell side into that, but Jeff Bezos has been selling recently and the stock has just been grinding higher. Even with around over 700 million in selling, Amazon's continuing to charge and press higher in the near term. So that's looking very constructive to move higher. Let's look at Tesla here. Tesla's obviously one that's lagged a little bit. But Tesla's had a nice little recovery, breaking out of some key zones here. Nice little recovery off of that massive dip down. Another secondary feud between Trump and Elon Musk. But obviously with the inventories coming out in Tesla, it seemed like that was a bit of a shakeout, fake out before Tesla charges to new higher highs. Even though the inventories wasn't really that impressive on Tesla, the market has obviously discounted the stock in such a big way that it didn't really matter what the inventories were. Home Depot's another one that's trying to stage a bit of a breakout here. Looking at some of these volume trends on Home Depot, you can clearly see that you've back tested an area, value area here. A huge volume accumulation zone where institutions are sitting. Back tested, breaking out off of that zone. I remain bullish Home Depot as long as you stay above this area. Nike's another one that's had an epic move to the upside off of its earnings, its recent earnings report. So this is a name that has been in a very strong downtrend, but it is trying to firm up here. So let's just identify where Nike is potentially wants to go. Let's clean up some of this chart action here. So let's see Nike's recent moves. So you can clearly see Nike is now back above that area where institutions were accumulating in, right around that $71 zone. As long as Nike holds above 71, this is an absolute all-out long. So if Nike does sort of a back test to 71, that is your signal to get long this name. Starbucks is obviously an interesting one that is trying to break out in the near term here. I am bullish Starbucks. I think we are starting to see that name perk up here. Absolutely bullish Starbucks. You can see we're sitting right on that volume zone. We're trading right on that area, that volume. Pretty impressive. Ford's another one that's broken out to the high side. Look at that epic breakout on Ford inverse head and shoulders. This one, once it's gap fill, after it consolidates a little bit, it should start to press higher. NCLH, what a monster on NCLH, ripping to the high side. That one's breaking out. So a lot of strong consumer discretionary stocks out here. We won't go through all of them, but they're acting very well. Let's look at these healthcare names. So obviously everyone's been eyeing up UNH. The question is UNH fulfilled its downside move, or is it going to make one more shakeout, fake out before it goes to new lows? Well, let's look at some of these volume trends first on UNH, right? Let's go from your COVID high down to this COVID low on UNH. Wow, institutions are sitting all the way up at 484. That's astronomically insane. All right, let's narrow this profile in a little bit. Let's go from this previous consolidation range. Wow, man, we've just obliterated key levels here on UNH. All right, let's go for more recent price action then. Where are these volume trends sitting? So you can clearly see volume is traded right around 272 on UNH based off of these previous trends. Again, 272. Let's pull this back a little bit more, shall we? Back to this previous breakout. Yeah, still monster volume up ahead. I mean, this is in a clear significant downtrend. Let's look at MRK. MRK is one that I am still bullish on in the near term. I think that we could see a sizable move to the upside. Let's see how MRK is doing recently. Yeah, so volume accumulation trends are right in the area where we've been accumulating. Point of control sitting right around 79 bucks. That's a very strong move. Let's look at Humana. That's another important name that has been in a very, very strong downtrend. Perhaps now that the Medicaid cuts are out of the way, this could potentially become a stock that starts to firm up and take some leadership. So you're still under that main point of control. I would want to see it get above 254, but any sort of price action above 254 could lead to a really, really strong breakout to the upside. All right, let's look at a couple other names here. Materials, obviously XLB is an interesting one. Let's just see if any tickers jump off the chart. Looked at healthcare already. Industrials. We'll peek at industrials. So GE has been a rocket ship to the upside, going through a little bit of consolidation right now on GE. All right, Boeing's another one that people like to trade, so we'll touch base on Mr. BA. Let's see where these volume trends are lying. So we're above that point of control. Boeing does look like it wants to break out here, guys. Above point of control, that's your long level. As long as you stay above 206, 207 here, it is looking like a long. Let's look at Alibaba and some of these China names. So again, Alibaba's gone through this huge, choppy price action. Wow, Alibaba could still try to retest that $100 level. That's where your volume profile is lying. Let's take a little bit longer term view, shall we? Wow, all the way at 83. Quite astonishing on Alibaba.